Hey everyone, checking in on the cryptocurrency space, and we're going to look at a couple of altcoin charts. I'll take some requests at the end. We'll check in on Bitcoin here just a moment, but first, going to talk about the new edge for trading cryptocurrency in the short term. And it's going to disappear eventually, but until it does, it's a useful tool, and it's now been 4 times that it has given us an opportunity to profit. And the first time it happens is when we observe and recognize and make note. The second time it happens, we say, okay, there's a pattern forming here. The third time it happens, we go for it again and we say, is it going to keep working? And it does. And now yesterday was the 4th time that it has happened. And what I am talking about is the banking sector. There is a clear correlation. It's the same thing. It's a fundamental narrative. And as any time a regional small bank is dumping, that means go long Bitcoin and keep doing it, or long the crypto stocks. And we keep doing it until it stops working. There'll be one time where it doesn't work, and then we stop out because we're using stop losses. We're not just blindly buying. And then we say, all right, that was a good run. And it was a nice, clear, easy, simple correlation to be watching for. So the most recent example, and in the prior live streams, we've already been going over this, but KRE is the regional banking ETF. And again, just to summarize really quickly, a lot of US regional banks are under pressure, and that is a bullish narrative for the metals and for Bitcoin. And so every time you have a new bank under distress or a new bank that's going under, you see the response in the charts. And so this most recent example was PACW. And so PACW is in free fall. This stock is falling apart. And yesterday after hours, this happened. So look at this dump in 15 minutes. 15 minutes, well, it was more like 20, 30 minutes before we found a bottom, 60% drop. That is the company saying, we're looking for a buyer because we're in a bit of trouble. And so knowing that this keeps happening, as soon as I see that information, I go over to our cryptocurrency chat room in the Chart Guys trading community, and I make this post. PACW Bank is dumping after hours as it weighs sale. Why am I posting about a bank in crypto? Because we know that means look bullish. And yet again, this is now the 4th time. Right there is when that happens, and the bulls go up from there. It's not a huge move. It's not a massive breakout, but it's an opportunity for easy money. Trading is not easy. Nothing about trading is easy. This is easy. This is a little facet of trading. It'll be gone, but it's easy while it is here. And so keep watching the financial sector. This is an edge for me as a trader just because my head is in the stock market world for 8 hours every single day. And so I have the benefit of being on top of this news every time it happens within minutes. And so what I do is I react by buying some crypto stocks. I post it in the chat room. Eventually I make it over to Twitter. I post it on Twitter. Usually that's, minutes later at that point. But the same thing happened with MARA after hours yesterday. So look at this action. We get the news comes out right around here, and we go from the 960s, quick little 3% plus move after hours. So there are multiple ways to take advantage of this, and those are a couple of them. So we'll continue to monitor the situation every time a bank goes under. There's other ones that are in trouble. PACW is one that is in trouble. WAL, another one that's in trouble. Zion. I mean, the charts are in trouble. Whether the underlying bank is actually in trouble, I'm not reading their balance sheet, so I don't know. But it's not done yet. I posted about this information on my Facebook timeline to my friends who don't know anything about markets. Like, hey, heads up, keep an eye on this. The banking sector's in trouble. Have your money FDIC insured. And now I just keep going back and updating that thread. Up, there goes another one. And so eventually this will stop and the banking sector will find some stability, but not just yet. And so with that, we have the metals as well looking really bullish. Gold just confirmed a weekly bull flag. Gold is testing the all-time high. That is extremely notable. Triple top at the all-time high right now, but it's a good-looking chart. Silver, weekly bull flag confirming, on the verge of confirming. So the metals, again, it's the same narrative. So I keep an eye on the metals with regards to Bitcoin because they are now narrative brothers, as long as this banking narrative continues to stick around. So after hours, we have Apple up a little bit on earnings. Just checking in on the NASDAQ real quick. We could see that we reached the highest level that we've seen in 8 months. We've now got multiple days of consolidation underway. And the big question is, can the bulls form a higher low and keep this move going? Or do we roll over and the broader market sees some weakness? Because it's definitely financial sector fear. And the S&P 500 is weaker than the NASDAQ because it has more exposure to the financial sector and the energy sector, which is dumping as well. So again, it can pay to be keeping an eye on all this stuff. And I understand for people that are just crypto traders, this is a lot to be keeping an eye on because it's a lot to be keeping an eye on. But that's why we work as a team. That's why we can have people keeping eyes out. You know, there's plenty of people that don't know anything about the financial sector and they see my post and then they act on that. So there's a lot of eyes in the market and we can share our eyes and observations. So keep doing it until it stops working. Same thing with our back burners, right? When we're in a bull market, we keep doing the back burners and then eventually they stop working and we know more significant consolidation is coming. So it works for a while and then it stops working. And that's going to be the case here as well. The dollar is testing the lows and it is still holding. And so if you are a crypto bull, you definitely want to see a bear break of this base of support. And I'm looking at 102.41 as a key level. And we're just chopping around here, but watching for the break. It's either going to be a bull break, which would be bearish for Bitcoin overall, or a bear break, which would be bullish for Bitcoin overall. That's pretty much all I'm watching with regards to everything outside of the crypto market that influences Bitcoin. And we know Bitcoin is the star of the show right now. One more point, Coinbase earnings after hours, and they are up. So a nice, let's see, we're up about $4. So about an 8% bull move after hours. Daily chart still has a ton of work to do to shift this momentum, but can't hurt Bitcoin that Coinbase is up on earnings. Not really an impact, but just something to keep an eye on. One more note on the crypto stocks. There's a massive divergence between Riot and MARA the last few days. Generally, they trade very similarly. One's stronger than the other. They sometimes flip-flop who's stronger, who's weaker, but it's been extremely notable. Look at Riot on the daily chart. Looks a lot like Bitcoin. So trading tight, but look at MARA. Much stronger. MARA is testing the high of 1065 here, which if Riot were doing the same thing, Riot would be testing 1210, and we are 10% under that level. So if we go to MARA divided by Riot, we can see the relative strength. We had been weaker than Riot for months, and the last 2 days is the most notable shift that we've seen in a while. So what that means is if I'm looking bullish, I'm looking at MARA, and if I'm looking bearish, I'm looking at Riot. And the reason for that is both companies gave a bit of an update as far as, you know, their mining operations and where they stand, and apparently MARA was better than Riot. They both have earnings next week, something else to be keeping an eye on. All right, now we're on to the Bitcoin crypto charts. But again, all this stuff is important. So Bitcoin is in a tightening daily range, and we're still looking for the answer to the question, is this a weekly bull flag or not? And the answer is, this is a weekly bull flag unless we break 27,000 support. The burden is on bears to prove to us that this is not a weekly bull flag by breaking that level. And again, this is where our simple statement comes into play. If the weekly EMA 12 is support, the bulls are in control. Look at it act as resistance on the way down. Reject, reject, just over it, but certainly not convincingly. Pretty much 4 rejections. And now holding, holding, and trying to hold yet again. So we'll see if the bulls are able to pull that off. But a weekly inside bar currently forming. 3 trading days left to go. So on this tightening daily range, you can be viewing the daily chart, or you can condense it down to the 2-day time frame to smooth it out if that's more easily viewable to you. I'm going to stick with the daily because I can pick out the clear levels here. Obviously the high of 31,000, and then we've got a lower high at 30,050. We've got our key support just under 27,000, and our more recent key support 27.6. So I'm viewing this as our good friend, a standard equilibrium. Big drop, big bounce, higher low. Anything under 30,000 is just a lower high, And then we would look for another higher low to try and form compared to 27.6. And so it's entirely possible that even if we see a red day tomorrow, that we hold 27.6 and tighten up into the weekend and then look for a break first thing next week. And on the 4-hour time frame, we can see we are still in a 4-hour uptrend at the moment, but I'm not really caring about the short-term time frames right now, because you can see the 4 hours getting a little bit choppy in the sense that, we confirm a little 4-hour downtrend into a bull break, and then we're back where we started. So not a ton of clarity there. And we know that when we're condensing down in a tightening range, the shorter term time frames oftentimes become a lot more choppy. So this is an instance where I recognize what time frame has the most clarity for me, and then that's all I care about. So nothing at all is happening in Bitcoin unless 27.6 breaks or unless 30,050 breaks. And so it really saves a whole lot of time, because on a daily basis, whenever I'm checking the chart and checking in on crypto, if Bitcoin is within these two lines, nothing is changing. And I don't even need to put another second of thought into it. If you are looking to trade within this range, trading within an equilibrium, you are looking to short and put a stop over 30,000, or you're hoping for a pullback to long and try and play off of 27.6 support. If you do not have conviction and confidence with the direction we're going to break this tightening range, you're waiting for the break and looking to act in response to that. And again, the burden is on bears to prove to us that this is not healthy weekly consolidation. If we see the dollar break bear, that's going to increase our probability needle. Let's just say, because of the prevailing trend, we're going to say that Bitcoin has a 55% chance of breaking this tightening range bullish. And if the dollar breaks bear and Bitcoin is still within this tightening range, then that maybe goes to 64% probability that we break bull. If the metals break out, that's going to tick the needle up a little bit for me that we can break bull. If another bank starts to free fall, that's going to increase probability of a bull break. So there's all these little inputs, all these little pieces of the puzzle that help us gauge probability of the most likely scenario. If we get the bear break, we're going to be looking for 12-hour oversold conditions or daily at that point, because we have seen 12 hours since this breakout started. And 12 hour is right around where we bottomed out here at 27,000. But we haven't seen daily in a while. And so if this pattern does break bear, we'll be watching for the potential that daily RSI gets oversold. So until then, we are patiently waiting. The dominance chart is a potential little cup and handle here. A cup and handle is a continuation pattern. The right side fails the left side, and then you bull flag, and then you break out. We know there is a wall here, just in the sense that we have rejected from this level 4 times in the last 2 years. And so one scenario, let's just go through what 2 ways could this break bull. The only 2 ways this dominance can break bull is if Bitcoin breaks this tightening range bullish and gets up to 31,000 plus, or if crypto dumps and altcoins dump much harder than Bitcoin. And both are a possibility, but in my opinion, you would need some kind of news headline for altcoins. Well, no, not necessarily. Both can definitely happen. So just be aware that this breaking bull doesn't mean crypto is breaking bull. It definitely can mean that, but we need to be paying attention to Bitcoin, obviously. But what this chart tells me is, as long as this dominance chart is up at its 2-year highs, the focus continues to be on Bitcoin. And there are definitely altcoins that are having, nice volatility and nice moves. But for me, it's Bitcoin and crypto stocks are the easier way to take advantage of cryptocurrency volatility right now. And when the dominance chart is showing us significant weakness, that's when it's alt season. That's when it's, big moves in the altcoin space that you're not seeing in other places. So if the dominance is up, I would be focusing on Bitcoin and a handful of altcoins. When the dominance is dumping and crypto is strong, we know that, you can throw a dart at the wall and you're going to hit an altcoin that is going up significantly. So it's not that kind of market environment, obviously. We do not have that confidence in the cryptocurrency sector right now. So you got to be really picky with altcoins. Main focus Bitcoin, keeping an eye on some altcoins, but being picky. So, and what many traders will do, let's say they look at a coin, let's say they're choosing, Ethereum, and they are wanting to see Ethereum start to outperform Bitcoin. They will enter a position right now, and they will do everything that they can to justify that this is going to happen. Ethereum is going to outperform Bitcoin because of this indicator, and this is shaping up, and this historically, and all right, I'm convinced. What I do when I'm approaching a counter trend move, and right now ETH BTC is weaker overall, so it is a counter trend move if you think Ethereum is going to outperform Bitcoin, I remain a skeptic. Prove it to me, Ethereum. Prove to me that you're going to outperform Bitcoin. I'm not giving you any benefit of the doubt. Your chart does not deserve any benefit of the doubt. I'm going in as a skeptic. I can maybe position myself for the possibility, but you've got to prove to me that that is taking place. And it's a very distinct difference between a newer trader and someone that is hoping and is trading, on emotions or beliefs, and someone who is more of an unbiased, full-time trader, doesn't care what the numbers are doing. So I would approach it with that mindset. It's the same thing with stocks. You go all over social media, someone picks a stock and this is gonna be the winner from the sector. And they want to echo chamber talking to all the people that share their opinion that, yup, this is gonna be the one. This one's gonna go up 500% over the next 10 years, and it's gonna be the winner. And what I do is I want to know every single thing wrong with that stock. I want to know every single red flag. And the newer traders and investors will put the blinders on. They don't want to know anything negative. They only want to know the positives. And that is the opposite way that you should be approaching markets, in my opinion. And that's more talking about, fundamentals and, long-term investing. But that kind of mindset is very dangerous for your money. It's a great way to lose money. So Ethereum is in the same tightening daily range as Bitcoin, even a bit tighter. The difference is we're a lot further from the recent high. So if we look at, percentage-wise, what do we need for Ethereum to see the highest levels in the last however many months? We need 15%, whereas Bitcoin only needs half of that. So very similar tightening range. Again, same thing. Just look at our levels. The only thing that I care about these two supports and these two resistances. If you break one of these levels, you've got to break the second one to confirm follow through. The last thing a trader wants to see, or I should say the last thing a bear wants to see, is a break of 1805, but a hold of 1785. You've got to take out both levels, ideally as fast as possible. Make it a convincing move. And same thing for the bulls. Take out both resistances. And that's how you trade in equilibrium, because oftentimes, let's see how in depth I want to get here. One thing that a lot of traders will make a mistake with is focusing on a time frame. That's great. But then once it breaks, they think it's game over. That's it. So what I mean by that is, let's say I'm playing Ethereum daily equilibrium and I'm positioning for a bull break. And it breaks bull. We get over 1940 and 1965. Great. It's exactly what I thought would happen. I'm in profit, and they think they won because the pattern they were watching broke bull, and they're in the clear. You got to zoom out. Every time you have an equilibrium and it breaks, or any pattern that breaks, zoom out. That's the automatic thing that you do, because what could happen is you break this equilibrium bull, and then you just set a weekly lower high at 2000 and then start consolidating. And if you are not aware that a weekly lower high is a possible scenario and you think you're in the clear because the daily broke bull, you're going to get trapped and you're going to get back your profit. So you've got to be aware of, okay, daily chart has concluded its pattern. Now we zoom out and look at the most likely scenario on the longer term time frame. ETH BTC needs to confirm a daily uptrend from here. So we had a nice little bounce the last couple of days. We've got to hold the low and break the high here to have the first confirmed daily uptrend in a long time. And I'm going to say that ETH BTC has not had a clear daily uptrend. There's been a couple little choppy, higher lows mixed in there, but a clear daily uptrend since mid-March. So it's been about 6 weeks now. Even this big old move never confirmed a daily uptrend. So bulls need to pull that off to set a weekly higher low. And I am watching this to be a potential falling wedge here. But that would mean that Bitcoin needs to break, I should say the dominance chart on Bitcoin would need to be rejecting from this multiple year top. So I am keeping an eye out. You know, what's something that could have ETH start to significantly outperform Bitcoin? If this breaks bull, absolutely. And that would then be a 6 month, now a 4 month higher low. And I'm watching this, every candle here is 4 months. Low, high, higher low, lower high. I'm just watching for a tightening long-term range. And I'm looking for a higher low compared to 4.9. And if this weekly falling wedge breaks bull, then it's going to be forming. And then we trade within that long-term tightening range for maybe another 8 months, 12 months, who knows. But I really like that weekly for clarity. So we're going to keep an eye on it. Binance, really nice daily equilibrium as well, but weakness. Little bit of relative weakness here. I'm watching two things, and we've been talking about this the last couple of live streams. We're watching the potential of a rising wedge because the bull break started to lack follow through. And we got an uptrend support line, and I actually had it drawn like this. But if I wanted to include this anchor point back here, then it would look more like this and not really be in play at this point. I like the resistance line. It's nice and clear, a bunch of touches. I don't love the support lines, but what I care more about is the price levels of the equilibrium. So our lower high was set. The bulls are struggling to form the higher low here compared to 318. We've got a little daily inside bar. Is BNB BTC showing us any red flags? Not just yet. It's got a tightening range as well. If BNB BTC sets a daily higher low, then the probabilities increase that we can remain within this tightening range. But Binance really needs to hold 320 and break 328 for the convincing daily higher low to be set. We need the 4-hour uptrend to confirm, essentially. But aggressive bears are keeping an eye out because we are close to this support, and I would expect we have a decent amount of stops at these levels. And if they break, then the weekly uptrend is at risk of being lost. We then look to 300 psychological to see if the weekly higher lows are able to be maintained or not. So again, that's another one. That equilibrium can break bear on the daily, but if we don't follow through and break 300, it's possibly just a weekly higher low. So if once we break the daily, zoom out and then watch the weekly time frame from there. Pepe. All bulls still. Hourly back burner, not quite, but bulls front ran hourly oversold conditions. We got down to 32 RSI. It was almost a bit of a falling wedge-like pattern here, but that's a back burner working. And we're going to keep an eye on these back burners. Hourly higher lows, EMA 12 support, blue sky breakout, very powerful. So we're going to be watching for next, no, we already saw it. 5-minute oversold, marked the hourly higher low. It's a blue sky breakout, and we know that blue sky breakouts are your best scenario for back burner probabilities in terms of those bounces following through. And this is just a perfect example. First 5-minute oversold conditions, marking the hourly higher low, 100%. Good Lord. That's hourly. Okay. That's the hourly, 100%. The 5-minute, first 5-minute oversold since the breakout. And again, it's being front run. It hit 31, but a very solid 26%. So that marks the hourly higher low. So we just used it up. So now I'm looking for the 15-minute. Next setup would be looking for, we got a 4-hour stair-step pattern with a higher low every candle for 9 in a row. We will eventually see 4-hour consolidation. And when we do, we're going to look for first 15-minute oversold conditions to set a 4-hour higher low. Just use a stop loss because there will be a time it doesn't work. Just like the correlation with the banking sector. It works, it works, it works, it works, it works, and then one time it doesn't work. And you don't want to have that one time it doesn't work be a big enough loss to offset the times that it did work. but still definitely in the spotlight. How high can it go? Way higher than you think. But certainly no bullish entries up here. 4-hour consolidation at a minimum. It'll top out eventually and it'll be a great short. But again, you can't be taking loss after loss after loss after loss trying to short this name because it's a frog. We know better than that at this point. ICP, a nice equilibrium as well. Low, high, higher low, lower high, higher low. Anything under 682 is a lower high. And we're anticipating that's the most likely scenario. If we see a break of 582, that daily lower high is likely set. Bigger picture. Man, I don't like the clarity on the weekly. We're sticking with the daily as long as we're tightening up here. Patiently waiting for tightening ranges to break. Some of these ranges are wider than others. This ICP range is way wider than Bitcoin's range, way wider than Binance's range in terms of percentage. But they're nice and clear, and they certainly will break soon. OP, are we losing it? Yeah, we're losing weekly support here. We're on the verge. 201. So we are on the verge of confirming a weekly downtrend. 177 is next after $2 here. And that would then have us zoom out and look for an eventual monthly higher low. But this tightening range on the verge of this bear break. A lot of space for a 4-hour lower high next bounce. There's a potential bottom fish play there, low risk. Hourly RSI is almost in the teens. At this point, I'd be playing the hourly stair step because I wouldn't be surprised to break $2 and have that mark a temporary bottom. But if this hourly stair step breaks bull, the hourly bounce is underway. There are often times where I would rather see a support break if I'm looking long. I do that a lot trading stocks, where we're dumping towards a key support, we're very extended, and then I look for the support break to be the volume climax that triggers the bounce. Because at that point, you've used up the stop losses from that support, and then you've got nobody left to short and no longs left to sell. And that's why the bounce often gets going after a key level breaks. Doesn't mean it will break in this instance, but worth keeping an eye on. Yeah, we're really oversold. This has got to be a super stack. It's an hourly super stack because the hourly, the 15-minute, the 5 minutes not quite crushed. Close to an hourly super stack dump into support. OMG has just been the bear of the bears. All right, I'm reading the chat room now. Thanks for the likes and the shares and the comments. I've got 7 minutes. Have I ever messed around with the moon indicators? I have not. And I won't say there's nothing there because I have not. And if I were to say there's nothing there, I'd be a fool who is saying things without adequate information. I'm open to anything. The world is a wild place with many things that we don't understand. Which time frame needs to hold for me to believe we've broken out lower or higher? So I already talked about that on Bitcoin with the nice clear lines. Talking about how if we're within that range, nothing is changing. Eventually, we'll probably get a new resistance level and I'll have a new line, but not yet. We'll look at Jasmine in just a moment. Have I found a particular time frame that the stair-step patterns work best on, or are they all equal? I would not say they're all equal. The longer term, the better. Because if you have a weekly stair-step for months, you know you're really beat up. And again, the example I give is J&J, the stock. And I have this now in my IRA. At no point in my life did I ever have any desire to have J&J in my IRA. But it gave me an 11-week stair step and I longed the bull break. And I sold enough where my stop is now under 150 risk-free. And maybe I'll be in this position in 6 years if the market recovers and we're back up to all-time highs. Who knows? But I have zero risk to potentially have a long-term position. And it was only because of the stair-step pattern. Here's an example of one that failed. Stair-step drop 3, 6, 9, 10 in a row. It broke bull, and then it rolled over. So that's an example where I would have stopped out. But fortunately, it worked on this one. So the longer term, the better. And right now, let's see, we were talking about CVS stock earlier today. Some people have been trying to long CVS. I look at the monthly, say, all right, well, that's a 6-month stair-step drop. Maybe it's worth waiting for the monthly stair-step pattern to break bull, and maybe that's going to mark a long-term bottom. So I like longer term, the better. And then it's the more candles, the better as well. I would much rather have 13 candles than 8. Also, it's higher probability when the longer term scenario aligns. If I'm looking for an hourly high or low and I have a 5-minute stair-step drop for 14 candles and we're still possibly setting an hourly high or low, I have more confidence in that stair-step. Jasmine. So bull break on the daily. Higher low and higher high. Good sign. We're testing the recent high of 738. And it's still resistance at this point. Decent bit of resistance in this zone. 4-hour uptrend short-term guide still looks healthy. When we lose the 4-hour uptrend, we zoom out and we'll watch for a daily high or low compared to 618. So when I'm watching this resistance test, I will not call it a rejection from resistance until we lose the 4-hour uptrend. Because yeah, we're pulling back just under it, but we can set a 4-hour high or low off EMA 12 and then get over it. So if you lose the 4-hour uptrend, it's a convincing rejection from daily resistance. But definitely one of the stronger coins recently. Multiple weekly inside bars breaking bull. AVAX. Definitely on the weaker side. It's a similar tightening range as many coins, but we got right down to the lows. We're rejecting from daily EMA 12, so it's on the weaker side. Without even looking, I know that AVAX BTC is near its lows, near its recent lows. So it's almost at the lowest level in many, 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 many months. And we can see that just visually by looking at it and saying it looks a lot like all these other patterns, but a little bit weaker. Bitcoin did not drop all the way down to this is where Bitcoin was hitting 27,000. So it's like I just view the altcoin in the form of Bitcoin's chart. This is where Bitcoin hit 27.6. And so we got much closer to support in terms of retracement size, not in terms of percentage, in terms of retracement size on AVAX. So the bears still have the upper hand because it's just clear lower highs. Got to break those lower highs or we're going to keep heading lower. You got it, Sivakumar. I talked about crypto in the broader market video. No, I talked about cannabis stocks in the broader market video. It's on our YouTube channel. Will do bigger. Old school reference. Gotta find that video somewhere. Peepin' steep sheep. Any tips for keeping track of notes for what time? Pen and paper. I write down, I just have scrap paper that I write down my to-do lists, that I write down the tickers that I'm watching. Pen and paper. Bitcoin, daily equilibrium, just write it down. Not only is it right in front of you, but the process of writing it down solidifies it in your memory. You're transferring it from your brain to your fingers to the paper, and that solidifies it. I can't tell you how many of these that I've gone through in the... Look at this, is just a piece of paper that came in the mail. I can't, no good info. Piece of paper that came in the mail, it would go in the trash, and I just fill it out, and then it eventually goes in the trash, and then I get another one. And I've gone through hundreds of these over the years. Thoughts on VWAP as an indicator? I don't use it, but people that I know, friends I have that are good traders do use it. So that's enough to tell me that there's something to it. Thanks, Trevor. Any reason for the evening stream thrown off from the FOMC? Usually I stream 2 p.m. Wednesday. FOMC was 2 p.m. Wednesday. I also had to hill my potatoes while it was still nice out. I talked about DCAing as being super risky. Not super risky, just you have to psychologically prepare for it to be zero. What if the 0.1% chance comes out that the government goes on an all-out offensive against Bitcoin? Is that very, very unlikely? Yeah. Is it possible? Absolutely. If that happens, your DCA plans tank and you lose a good bit of money. Sure, maybe that's a long-term opportunity. Who the hell knows? But that would be a black swan event that you need to be mentally prepared for. Because if you do not have a stop loss, you are subject to black swan risk. To finish the question, I used a comparison to the cannabis industry. Are they really comparable in terms of market cap and size of the crypto industry? They're definitely comparable enough for me. Again, what if that happens? If that happens, everything dumps and you lose 80% of your money that's in crypto. Again, not likely, but absolutely possible. You've got to prepare for the possibility of the very unlikely. Ask anybody on FTX the lessons that they learned. Always prepare for worst case scenario. Establish your game plan, prepare for worst case scenario, and then you're riding free. Nothing else. I mean, of course, an unknown worst case scenario can slap you in the face, but I've got all my worst case scenarios planned out. You got a worst case scenario? If your house burns down and your hard wallet's in it, you need to plan for everything. All right, I got to wrap it up. Sun is setting. Time to work out. Appreciate you all tuning in. Thanks again for the likes. Just 16 more to get up to 100. All about tightening daily ranges, watching the banking sector, watching the dollar key support test. And don't forget to do good things.